Man, oh man, am I pumped for this week, guys. We have a lot of stocks to break down in this video, and this is actually part 2. I'm not sure if you caught the previous video from today where we went over, I think, about 8, 9, 10 stocks that are reporting on Monday and Tuesday. This is the second part of that video where we're going to go over 10 more companies that are reporting on Wednesday and Thursday primarily for the companies we're going to talk about today. So if you guys find value, of course, hit that like button, subscribe, let me know your thoughts in the comments down below, and if you want some free money, who doesn't like free money? Get up to 15 stocks from Moomoo, each up to $2,000, and you could also get up to 12 stocks from Webull with any amount deposited. All of those are linked down below, guys, and just realize all those links help out the channel, full disclosure, and I appreciate you all as always. So cheers, let's dive into the video, guys, starting off with stock number 1, none other than PayPal, ticker symbol PYPL. PayPal is reporting on, let me see here, I think Wednesday. Let me double check though for you guys so we get accurate information on this video. I'm pretty sure they're on the 9th, which is, gosh, my days are all messed up. I think that's Wednesday. Either way, they're reporting this upcoming week, and they're looking to do EPS of $1.20. That's the estimate here on revenue of $7.39 billion, which would be up about 6.8% year over year. Not too bad considering, the growth has slowed down a good amount, but considering other companies are literally declining year over year. We saw Apple, we saw a bunch of other big tech names, and just companies in general are declining in terms of revenue year over year. PayPal's looking to grow about 7%. Not too bad. That's if the revenue comes in at $7.4 billion. And looking at the chart, guys, the stock is up a bunch heading into the report. And let me actually make sure the dates are right. What's the 9th? I'm pretty sure that's Wednesday. I'm pulling up my calendar here, guys. No, I'm wrong. It's Thursday. So PayPal is on Thursday, guys. That's the 9th. We'll remember that for the rest of the video because we're going to have to talk about more dates with all the other companies as well. So, PayPal is on Thursday after the bell. Usually is when they report. After the bell. And the stock is up from $66 in the end of December, early January to now $85. In other words, it is up 30% heading into the report. So like I've said on these videos, guys, recently, a lot of these stocks are up massively heading into their earnings, which sets up for a potential collapse if earnings aren't as good as expected, like we saw with Apple, which, well, funny enough, Apple went up on Friday, but with Amazon, earnings weren't as great as expected. It went down 8.4%. Google ended up selling off 3.3%. All of these ran into the earnings, and that's kind of what we're seeing again with PayPal here. So, yeah, I mean, I own PayPal. It's a long-term investment of mine, but I'm not going to be trading it here. If you guys look at, if I just draw a channel tool or a channel very quickly, let me get the channel tool, you guys are going to see we're pretty much at the top of the channel right now. We're very overbought heading into these earnings, so I'm being very cautious with a company like PayPal here, but either way, I'm watching it because I own it, number one, and number two, if it does pull back, we might be able to get a dip buy on it, maybe in the, mid-high 70s. That's where I would look at PayPal personally. So they're on Thursday. We're watching out for them. That's going to be one worth watching for sure. We also have PepsiCo, which you guys probably eat their products, maybe not, I don't know. You definitely drink their products. I don't know, do you? Let me know in the comments. But yeah, Pepsi, guys, the chart looks pretty decent. I'm not going to lie. Look at this chart. If we pull the yearly up, maybe even the 3-year, you'll be able to see it. Yeah, it's clear as day on the 3-year. This thing's uptrending on the yearly chart as well. You guys can see. All we have to do is draw a channel out on this bad boy, and you guys can see we're at the bottom of the channel. If earnings, and this is a stock that kind of like we covered, what was the other one yesterday? I think it was Enphase. Enphase is down 40% in the past couple of weeks. It has not participated at all in the rally in the stock market. Pepsi's the same. Even though it's not it's not at all a similar company to Enphase, that's not the point. The point is it is sold off throughout the past month and a half, because let's be honest, Pepsi got a bit frothy, right? Coca-Cola got way frothy, which we're not going to get into in this video. A lot of these safe companies, right, that safe stocks that a lot of people jumped into last year and they're still in, quite frankly. They're just way overvalued. There's no way I'm buying Pepsi here as a long-term investment, Coca-Cola, Procter & Gamble at these levels. I think it's too frothy. But as a trade, different here, very different. Long-term, I'm not looking at these. Not at all. But as a trade, Pepsi looks pretty decent. At the bottom of the channel here, you guys can see last time they reported, and the time before that, we were literally, the setup was identical pretty much. 2 quarters ago, it was at the bottom of the channel. They reported, the stock ended up ripping $30, right? Last quarter, the stock was at 160 at the bottom of the channel, and they reported the stock ran up all the way to 190. Now we're at the bottom of this channel again, and we have earnings coming up this week. So this could be setting up for a pop. I'm not saying for sure. I'm not buying this thing before earnings, but I'm going to be watching it on Thursday morning. That's when earnings come out. And this could be setting up for a nice, this, in my opinion, is setting up for a multi-week swing trade. Potentially. We'll see. I mean, if earnings are awful, this could come down and break the channel for all we know. But Pepsi, I'm watching it this week for sure. Uber is another one which has been doing very well heading into earnings, which I don't like to see. Again, a lot of these companies have been selling off after earnings due to their being a bit of irrational exuberance heading into earnings, if you will. This thing is up 40% in the past 40 days. I mean, come on, guys. That is insane. So Uber is looking to do negative 18 cents. And I forgot to mention, Pepsi is looking to do $1.65 on revenue of $26.85 billion, which is up 6.5% roughly year over year. So Pepsi and PayPal, their revenues are going to be growing, projected 6-7% year over year. Uber, on the flip side, well, they're looking to do revenue of $8.5 billion. Get ready for this. Up almost 50% year over year, although they're still going to be unprofitable. They're looking to do EPS of negative 18 cents. But now that I'm looking at this, wait a second. Uber last quarter did 61 cents, and they lost 61 cents. And the quarter before that, they lost $1.33. So actually, they're slowly creeping back to profitability. But again, guys, it being up 40% heading into these earnings, and now we're approaching a massive resistance. We're at it right now at $34. That makes me a little bit nervous. I'm not going to lie. That makes me a little bit nervous. But who knows? Maybe we plow right through 35 and continue the rip here. So I'm going to set my alert at $35, and we'll see what it does from that point. We also have Disney this week, guys. They're looking to do EPS of 79 cents on revenue of $23.36 billion, up 7.1% year over year. They're looking to report on, are they on Wednesday? Yeah, they're on Wednesday on the 8th of February after the market. So keep in mind, guys, this chart looks pretty good, and it's not as overbought as some other ones, but then again, it is up about 35%. But I'm looking at the RSI. RSI is not as overbought. RSI is roughly at 58 right now. But it all comes down to earnings, right? And there's no doubt about it. Bulls have been crushing it. We broke through $100. That was a big resistance. 108 was another one from the beginning of November, end of October. We broke through that. Now it looks like it wants to fill the gap to 117. But with earnings, who knows what's going to happen. But overall, kudos to Disney. Finally, the stock's been turning for the better. But who knows what's going to come after earnings. We could easily get, a curveball that could send the stock tumbling. So Robinhood, let's pull it up. Robinhood is also this week. They're on the 8th, I believe. Yeah, 8th after the bell, same day as Disney. They're looking to do negative 14 cents EPS on revenue of almost $400 million, which would be up 9.5% year over year. So you guys know Robinhood has been going through it, right? With we saw the boom of the retail investor in 2020-21, and the truth is, although there's a lot of retail investors still out there, you guys are watching, I'm one as well, we're all in this together, but we also had the bust of the retail investor, as a lot of people, let's be honest, in the past year have gotten shaken out of their positions. They lost a bunch of money, they blew up their accounts, so they're just not interested anymore. And Robinhood, well, they were the main, brokerage for a lot of these retail investors, and I'm sure, I haven't looked into their, 10K, 10Q personally, but I'm sure, the customers, the account openings have dropped tremendously. That's just my guess, right? And of course, I'm not looking to invest in Robinhood. I've mentioned that before on the channel, but for the new viewers out there, I would not buy Robinhood stock as a long term, at least me personally. But we'll be watching it with earnings coming up. They're looking to do again negative 14 cents, revenue 400 million, up 9%, 10%. That's not too bad. And they're on Wednesday after the bell. Keep your eyes out on good old Robinhood. We also have MGM Resorts. Let's pull this up. MGM is the stock's also been crushing. You guys can see this is one that we called out. You see my previous analysis here. We have that huge arrow. I swear to God, guys, I did not just draw that. No joke. We actually nailed that call out. It went from 33, not almost 43. And to be honest, the move has been made. There's no way, me personally, I'm going to FOMO into this right now. Sure, if it was down here in the low 30s, that would have been a much better point, which is where we called it out a couple weeks ago. But now the move's been made heading into earnings, which they're looking to do negative $1.36 on revenue of $3.35 billion, up 9.5% year over year. Not bad. So we'll see. On Wednesday after the bell, guys, if this comes down, let's say back to the lower 30s, maybe not lower 30s, more like mid 30s, that'd be a spot where I'd be watching it. And, a lot of these stocks, guys, you got to fight FOMO. A lot of them are starting to run away from us. And to be honest, so far, just looking at charts, the best chart that I've seen out of the stocks we've covered is Pepsi. And this is really the only one that's relatively oversold heading into earnings. So I'm really interested in this one, actually, as a trade heading into this week. Let's see. Under Armour is another one, which I couldn't pull the estimates on, but they're reporting on, I believe, Tuesday. No, they're on Wednesday. Wednesday morning on the 8th of February, and this stock's pretty much doubled up and some in the past couple of weeks since the middle end of October. It's up about 90. Actually, has it even doubled up officially? Maybe not officially, but it's damn near close, guys. 90% move in the past couple months for Under Armour. And if we pull up, let's see, actually, let's draw some charts, or lines here, rather. If we draw some lines, you guys can see clear resistance. Well, now we broke past it, but it was at 1040. Another one was at 940. We plowed right through both of those. Now let's see if we can maybe cool off, right around the 10s. But then again, this stock is known for being extremely volatile around earnings. For all we know, this could rip 30% after earnings. I don't know. It might not even cool off. That's what I'm trying to get at. But overall, Under Armour, we're watching it. AbbVie is another one. Let's pull it up. AbbVie's one that's pretty oversold here, and we do have a bit of a bullish divergence. You guys can probably see that. Let me draw it out here. You guys see the bullish divergence. Now, all we have to do is really start taking out this 50 SMA. If this starts breaking out of, let's say, $150 on AbbVie into earnings, especially after earnings, since I don't like to gamble on earnings, but if we're able to break 150 with earnings on the 9th, Thursday morning, that'd be a good sign. That'd be a very good sign. They're looking to do $3.57 in EPS on revenue of $15.31 billion, which would be up roughly 2.8% year over year. Not bad. So my alert right now is set at 150. Overall, the stock is, down $24 in the past couple weeks. In other words, 13%. So it's officially in correction territory. Let's see if we can get that move past $150 on AbbVie. We also have Duke Energy this week, which right off the bat, first thing I saw is a Head and Shoulders, right? We can see this here, which is not the best sign for the bulls, no doubt about it. But if we're able to get buyers maybe right around the moving averages, the 180, which we're trying to see, or rather buyers are trying to come in there, if we do hold that point, sure, maybe and especially if we break the neckline after that at about 103, maybe we start to get a breakout. But I'm leaning more towards a breakdown. If this thing were to break under 100, that right shoulder starts to complete, things could get ugly. So I'm going to set an alert here. Mark is at or below $100. Might as well put another one at mark is at or above 105, slightly above that neckline. If it's able to break the neckline, it could start moving in the other direction. So we have Duke on Thursday morning. Watch out for it. And they're looking to do EPS of $1.06 on revenue of over $5 billion, more like 5.05 roughly, which would be down 19% year over year. So expect a huge decline in revenue for Duke Energy right off the bat here, guys. That's what we're seeing. And the last stock, and by the way, if you got stuck till the end, let me know your thoughts in the comments down below. Hit that like button, subscribe. I appreciate you all as always. The last one here is Dexcom, ticker symbol DXCM, which has been kind of moving sideways, pretty flat past couple months. You can see it's been hovering between 105.6 roughly to about 115, 120-ish, and at the same time, it's been holding trend. You guys can see here it's been holding trend, and you could argue we have a wedge as well. So this chart looks pretty good, actually. This and Pepsi are probably the best-looking charts out of the ones we've covered today, guys, which is funny. Pepsi was near the top of the list. Dexcom's the last one. I probably should have put both of them near the top of the list, but it is what it is. They're on the 9th. They're on Thursday morning, and Dexcom's looking to do 27 cents in EPS on revenue of $809 million, which would be up almost 16% year over year. Not bad. So I'm really liking the chart here. Although we do have a death cross, that's not the best sign. It's not the end of the world at the same time. If we do end up taking out the wedge, we break $115. This could really start to make a move. But we're not there yet, guys. So let's not get too excited. Let's not jump the GUN. I don't even know if I could say that here on YouTube anymore. I don't even freaking know, guys. But let's just be patient, right? Let's just be patient, right? With Dexcom, alerts at 115. We'll see what it ends up doing. So let me run through the list again very quickly, guys. I know we covered a lot of them in this video, but the first one was PayPal, followed by Pepsi, Uber, Disney, Robinhood, MGM, UA, which is Under Armour, AbbVie, Duke, and Dexcom. And the only ones that I own out of all these at this point, I used to own Pepsi. I sold out of that a while ago. Again, I think it's so frothy. I mean, buying Pepsi here as a long-term investment, there's just no way. I mean, I would do it. If you want to go do it, go ahead by all means, but I think it's too overvalued. But only ones I own are PayPal and Disney, really. I mean, looking at these, yeah. And I'm willing to trade all of them if the setups are right. But as a long-term, Disney, PayPal, those are the only ones I'm owning right now. So which ones do you own, guys? Let me know your thoughts in the comments. And don't forget to get up to 15 stocks from Moomoo and up to 12 stocks from Webull. All the details are linked down below. And if you guys want to join me on Patreon, I just started a Patreon portfolio where we're going to be growing that from $0 from scratch to however big it gets over time. If you guys want to see all the moves, full transparency on Patreon, check it out. Link down below. Sign up to Tier 1. It's literally $10 a month. If you guys want to check it out, there's limited spots, up to 20 spots right now. Check it out. There's more. There's more stuff on Patreon as well, not just the Patreon portfolio. All the details are down below, guys. I'll catch you in the next one. Oh, and by the way, don't forget to check out part 1. We have more stocks for this week. Go check out the previous video. I'll see you guys there. Peace out.